If the Islamic bank is not able to basically to pay the expected profit to the customers, so from a Sharia compliant perspective, the customers should realize this fact because it's a profit sharing agreement. So there is a risk element of the customers not receiving any profit. However, the Islamic banks usually mitigate this risk by different approaches. One of the approaches that are acceptable from a Sharia perspective is for the bank to forego its share of the profit to pay basically profit to customers. However, this shouldn't be contractual with the customer. The bank can decide this at its discretion without contracting this or putting this in the legal terms and conditions or in any contractual way with the customers. Of course, there are some other measures that the bank can take to ensure that it still can pay the profit expected to customers. For example, there is something called the Profit Stabilization Reserve or Profit Equalization Reserve account, which another way to mitigate basically this risk. However, ultimately, it's part or basically the core of the principle used for savings account that there is a potential for loss, and the bank and the customer basically should realize this fact. However, as mentioned, this doesn't mean that there are not or there aren't steps that can be taken to mitigate this risk.